Start your. What's up? Yeah. What's going on, AS82?
Hey, Max, how's it going?
Good. How about you, man?
Oh, can't complain. Can't complain.
Very nice. You enjoying this recent market upside?
Yeah, today was an interesting. Yeah, I'm enjoying it. Learning.
Hell yeah. Love to hear it. Well, you're the only one here so far. I would wait, but it seems we're already a few minutes in. If you have anything you wanna look at, man, I guess you're getting a free one-on-one session.
It's on your process. I was following you. Actually, while I was driving, right, was following the play, all you had on FTX.
Sure.
One that kept kind of going up, testing it, and then bouncing back. Just want to understand if me stay in, even though at one point it was down.
That's a great question, and I think this is a good example for us to fully explain it. So, coming into the day, right? You can see my stream. It's up.
Yes.
Cool.
Yeah.
All right. So this is the session, right? So we already gapped up pretty heavy. Yesterday we closed all the way down here at 56. And we had gapped up all the way here. We gapped up to 93. So it was already like, anyone who entered shorts yesterday was liquidating off the open, right? So we got a bit of a gap and run. So immediately we opened, even though there weren't necessarily buyers here, there were so many shorts that were being, liquidated, right? They were closing their positions quickly, and that's what gave us that initial pop. So right off the bat, I'm sure you notice at the end of the day here, we've got three big shelves, right? We've got this first shelf here, we've got the second shelf here, and we've got this third one, right? And so off the bat, are you familiar with how extensive we've covered volume profile in the recent sessions?
Yeah, I read it through actually on the post that you had on YouTube. I just watched it. I'll probably still understand it and with you. I kind of got the basics of it.
Yeah. So I'm going to highlight a couple spots here, and these are the two volume tapers, right? These are the spots where volume tapers off, and this is essentially where a balance is created, right? This is where, right, the top of this is where sellers are going to be most present, and you can see it wasn't fully developed until that first pivot, but the second time we got to the top of that taper, what happened, right? Sellers were present that first time. Um, and then below that is the bottom taper, right? And so this is where buyers are going to be willing to step in. Again, this wouldn't really be supported until we got that first bounce, right? So we entered our longs. Yeah.
Can I ask a question there? So, at the top, the sellers are going to step in, they'll step in, and at the bottom is where they seeing on the screen here that gives you that information.
These shelves, these guys right here.
The shelf.
Yes. So
Okay.
price always tends to stick where liquidity is, right? It wants to stay in a familiar area where price acceptance is shown. And what other place is price accepted than where the most volume has been done, right? So, in a sense, where the volume shelf has occurred is where the most price acceptance is. And so that's the range that price will typically look to stay in. And so we entered our shorts, or we entered our calls. We had seen that we were clearly bullish on the day, right? So right off the bat, we're looking for a move higher, right? We're not looking to short this yet. There's nothing here that tells us to get short. You could have shorted this, right, with your stops being over this pivot high, and that would have been a quality play. And it may have it worked here for a little bit, but you didn't get much follow through, right? You got only about 10 points here. But the main thing was we had seen that this spot had been defended before and confirmed, right? And at the same time, this shelf was building out, right? So below this area right here, this is called a liquidity gap, right? And so I'm sure you heard me say it intraday. If we fail this 15 area, it's likely that we were going to fall all the way back into 05, right? But you can see the reason we kept holding those calls, even though we entered right here, we entered at about 16, right, on that dip. Right when we got into that lower volume shelf, we took our calls. and they didn't work for a little bit, and we took a decent drawdown. I think we entered them at 250 a piece, right? And they ended up hitting a low of like 175. We took like I don't know, like a 35% drawdown on the contracts before it started working. But every time they dropped it into this liquidity gap, what happened? Right? Buyers were saving it. They couldn't close anything back within this liquidity gap. And so sure enough, all we had to do was keep holding. If they had closed anything down here and made it weak, right, I would have stopped out. But we continued to defend the general area of this volume taper. And so all we did basically was we were just looking for a quick scalp. We were just looking for the top of the range. And sure enough, they gave it to us, right? Our bulk of the position we sized out right here. So we only caught from about 14 up to 21, right? So the only reason it was a good play is because we were playing SPX contracts. And so we were able to get, a sizable percentage move on a relatively small chart move, right? But again, we were just risking. This is a spot where, we're buying the dip, even though it's small, even though it was literally only, from 22 was the high a day, even though we were only buying a 7 or 8 point dip, because of this volume shelf, it gave us a very clear stop loss and a very defined risk, right? Because if we fell into this liquidity gap, we knew that there was confidence that it would continue lower to the next area of major liquidity, which was right here at 05. So long as we were defending this spot right here, and I'll remove this because you know what we're looking at, right? As soon as we fell into this gap here, it was going to be bad news for us. But we continued to defend this shelf, and there, sure enough, we ended up getting our bounce and test of the top of the shelf again, where we did struggle a little bit, and they kind of faked it out a little, but we saw a higher high, and sure enough, we were able to get a continuation move into the next spot that built value there, right? But this was a super clean play, purely off of volume profile. Nothing more, nothing less. I mean, there's more in the sense that we had the understanding that today was bullish, right? Market is very bullish at the moment. We were trending higher, so we didn't really want to be aggressively shorting anything. This morning I did try a short and it worked out for quick trim, but it quickly got us out, and that's when we kind of realized, okay, today is not the day to be shorting, right? Um, but, you know, for one, we've got the price action, which is bullish, right? So we were looking for upside plays, upside moves, and then we found a quality spot that we felt we could risk against, and it worked out. So again, we waited for this shelf to develop. It took, a rejection, a bounce, and another rejection before we actually saw this whole shelf develop, right? But by the time we got down here, this was more than built out. And at the day, you have to think the point of control isn't up here yet because we haven't done any price action here. But the point of control is right here, and you could see they were respecting it. They very much were respecting it. You can see they did not want to get above that spot. But sure enough, once we got above that point of control, the reason I'm saying that is because you can see this point right here is where the most volume was done, right? And intraday, were you in voice chat with us?
Yeah, it was in and out, but I was voice chatting most of this work.
Okay. But yeah, this is where at the time the point of control was, and we were dancing, hovering. So it made me a little bit nervous because we were under the point of control at the time, but we were continuously saving this volume taper, right? And so the thing about volume profile is it can give you a few different levels. One person might argue that the taper's at, 15 right here, because this is where it starts to taper off. Another guy might argue that it's all the way at, down here at 13.75 or whatever, right? And so if anything, you could just draw a zone, and you might see that a zone actually maybe works a little bit better for you, right? Because it'll give you a little bit more wiggle room. So if I extend this out a little bit, couple days, you can see, right? So long as they don't close anything under this, you're safe, right?
Yeah.
And so this is where we risked. We took our first entry on the second candle right here. In fact, let me get the exact time for you. The exact time we sent the alert was 8:55. So we'll even throw this on 1 minute. Let me get rid of some of this noise in here. I don't know why I even have these moving averages up. Our exact entry was 8:55, so that was right here, right on this candle, right as soon as we hit 15. But that's really all it was we saw that, and it worked yesterday too, right? Yesterday you could have played longs using the exact same idea, right? We developed a very big shelf. And now, granted, the taper on this one isn't as clean. One person could argue it's right here at 24. Another person could argue it's all the way down here at 21, right? But they both would have worked. If you drew a zone, say from maybe that 24 spot that I just said, all the way down to the bottom at 20, look at how clean of an entry that gives you, right?
On the volume profile, you're seeing volume.
Yes. Yes. So this only shows the profile of that session. So it starts just now, like when futures open. So if I go to, today, you can actually see that there's one starting right now because futures just reopened. But yes, this is a session volume profile. But you can see yesterday it worked like a charm, right? Like longs off of this area, even though, it was a little bit less confident because of, this is exactly when Powell was speaking and we had FOMC and all that. So granted, you may not have loved to play this. And honestly, I'll even be 100% real with you. Um, just off an understanding of price action, right? You see a very clean bottom here, and then you see a rejection of high of day and fail all the way back into that spot. I'd say like 8 out of 10 times, something like this would make you more confident in a breakdown. But whatever happened, whatever buyers were present, they saved that point of control or they saved that volume taper and we ended up working higher. Right. But yeah, you could have played longs off this spot, 1, 2, 3, 4 times, and they all would have worked.
Okay.
And
I'm going to say my problem, and I think I know what it is, I get a little bit nervous and I get out of I just kind of want to book my profit I realize, and then I end up missing on a huge upside. So for example, that day, I got out for maybe I think it might have been like a 10% gain. Whereas if I had stayed in, I could have realized a much bigger return based off of ultimately how the play, how it unfolded.
yeah,
So I keep finding myself kind of jumping out quickly just because I don't want to let I want to let a trade turn ahead, and then I end up missing out on a significant
so that could
potential return.
that could be a number of problems, and I'm sure I'm confident we can figure it out now. Um, First of all, what kind of sizing are you playing with? Are you playing with just one contract, or are you playing with three or four or more?
See, more. I'm playing with more. Usually, I go anywhere from 5 to 10 contracts.
Okay, so do you have I know you said 5 to 10 contracts, but do you have a consistent sizing? Like, for example, do you try to stay close to $3,000 per position? Do you try to stay close to $1,000 a position?
Say, usually when I go in, I'm going in
Really? Okay,
position.
nice. Now the second question, the follow up to that,
Yeah, maybe I'm slightly too big.
I was gonna say, yeah. Now the follow up question to that is, are you comfortable with that 5K? Because you're willing to play SPX, which I assume you are, right? You're playing SPX with me. So
Yeah.
when we stop out of our positions, I'm sure you notice they're pretty sizable losses. We typically lose 30 to 40% on our losers. Is that something you're comfortable with?
It has been something that I've been comfortable with and getting position for a loss.
Okay. So
but maybe secretly fearful of losing it, so that's why I find myself jumping out of divisions quicker.
Yes. Okay. So from what I hear, we've got two positives. We've got two check marks, right? You're using multiple contracts. That's great. And you're comfortable with your sizing and you acknowledge the risk. That's great. Now, the only thing I would suggest, it sounds like all you need to do is focus on scaling out. So for me personally, I'm sure you've noticed, when I enter a position is the only time I'm willing for it to go red, right? Once a play goes green and we've taken our first trims, I do not let the contracts go red from there. And that's as simple as it gets. That is my system, right? So you can see we entered here, right, for 250. Contracts drew down to 175 right here. Here, right about here, we took a trim for about $400. On this rejection right here, contracts hit 250. I got out. Despite us being higher, the contracts got break even. In case this rejected and this was a fake breakout, I wasn't willing to sit through and give back any money. So I set my contracts at break even and I got out, despite it still looking fine, right? We were still above the point of control. This was still a higher low. There wasn't really a reason to get out. But because we're playing SPX contracts and so much time had passed and they had taken IV decay or theta decay, there was, I wasn't willing to let them go red. So I got out. But because we had scaled out on the way up, we had taken 3 trims already, it was guaranteed a green position so long as I cut my runners at break even, right? So I would say some people might say that what I'm about to say is dumb because you're giving back a lot of money, but when you're playing SPX and small moves like this can throw contracts extremely wide, um, it makes sense. So personally, I would say just focus on finding conviction in a single direction move, right? You don't necessarily need to pick out targets. I mean, you definitely want to look at areas that will get respected and where would be a smart place to sell. Like, for example, this 20 area, we rejected it twice. So this was definitely a spot I planned to take a trim, regardless of what the contracts were going to be worth. So this is a spot that I trimmed. And I mean, you'd have to zoom out and go find another level when we get up to these prices. Um, but at the end of the day, if your contract is green, there's no reason to get out. There's no reason, in my opinion. If you've taken a profit and you've taken a trim, the only reason to get out is if your contract falls to break even. That's the only way to guarantee that the play stays green. And it's the only way to guarantee that you will catch big moves. It's the only way to guarantee that if it keeps running, you will have a position left. You just have to stick to that rule, right? If my contract is still green, I'm not getting out until it falls back to break even, right?
Yeah.
Do you get what I'm saying?
Yeah.
It cannot be simpler. It can't be. Like, people really try to overcomplicate it and they try to set these trail stops and they do all these crazy orders and they make all this criteria for when to get out. If you're playing SPX, you have so little control over that. So I just say, if you've taken a trim, set your remaining contracts at break even. It's the only way that you're both going to make sure that you guarantee the play is a win, but also guarantee that if it keeps running, you'll be in it still. It's simple. It's just that. It's not. I promise you, it doesn't get any simpler than that. You just if you've taken a trim, set your trail stop at break even. If your contracts aren't at break even, why are you selling? That's it. That's it. I just gave you the holy grail. Yeah. People try to overcomplicate it and it just doesn't need to be. And that's one way to take emotions out of it. So you already told me you're playing with multiple contracts, check. And you already told me that you're comfortable with your sizing and you acknowledge the risk, check. So all you have to do from there is, take your trims, set your trail stop at break even, and that's it. right? And so today, right, if this dipped, but the contracts didn't get to 250 again, they did, unfortunately, it got me out. But if this didn't get to 250 again, where we entered, we would have caught all this, right? But then again, it hit 250, it got me out. I didn't lose anything on the play. I got my trims, I got my green, I was satisfied. But for the case that this did reject all the way back into here, I wasn't willing to give anything back, right? And so, again, I feel like a lot more people should just dumb down their trading. It's a very simple system, and it's proved me right over time. And don't overcomplicate it. All right, I'm starting to ramble. Someone asked something else.
I appreciate it.
Yeah, of course, man. Hope that make sure and make a conscious effort too. Because like I said, if it should take the emotions in the decision making factor out of it. The only thing you have to do is just find quality areas that you're willing to risk against. That's probably the hardest part. Is just finding out where you want to get in. But once you're in, just set an acceptable amount of what you're willing to lose in case you are wrong about the entry spot. But once you go green, that's it. Just scale out and set your trail stops to break even. All right. Anon, how's your night going, man? No, not here. Captain, how's your night going? Love to hear it. Love to hear it. You got anything you want to check out or anything you want to ask?
No, that expire at the end of next week.
Okay.
And so for now, kind of sitting on those.
So when you say broke structure, do you want to just give me a price? I'm having trouble figuring out where you entered.
Yeah. I price and time.
And what contracts are you on?
I think it'll be the 290s next week. So it should be like 1110. It'll be the 290s. But give me a second.
Oh, my man went deep out of the money. Okay. Oh, dude, those are.
The thing is,
Yeah.
it was at the
Okay, so 3409. I like your entry. You got a good entry. You got a really good entry, honestly. That's probably exactly where I would have liked it as well. So good on that. But I will say I hate your contract selection. I think that's really rough. And they might be green now, but the spread is really tough. So your spread is one
right.
thing you got to deal with, but also look at your theta on this thing, right? This thing has spent, 1, 2, 3, 4, 5, 6 days down here. So if it stays down here for another day, look at your theta on these contracts, dude. This thing's gonna lose a third of its value just in a day. You know?
Right.
I feel like these 275s would have been a much better pick. I mean, because obviously if you're going this far out of the money, you're not willing to risk a lot on this play. How many contracts do you have?
At 2.
What's your account size, if you don't mind me asking? Okay, so you can afford these, within your risk. So let's say your risk is 10%, right? And you're willing to use $500 on any play. You could have totally afforded three of these, or even two of these, you know? Um, I'm sure you know, but the closer to the money, the safer the contract, and the less theta you'll
Yeah.
take. I think these are extremely high risk. While I do think that SMCI has a very good chance of a bounce here with time, I think you can easily see, I think you can easily see this 265 level again next week, if not even, Monday or Tuesday. But with where your contracts are positioned, I don't even know if you'll be green if we see that, if it takes 2 days. Sure. Yeah, I do. Um, 275s, if not, or even closer, like 270 maybe. Yeah. Yeah, I do think that's a good idea. I think you definitely want to get closer to the money. Are you green on them right now? You're green on them, right? Okay. Nice, nice. Yeah, I would definitely lock that in and maybe look for another dip to get back in. Any dip into this 240 area would be good.
So yeah, so some difference for what
270s are good for your sizing. If I was personally taking this play, I think these 260s are the best because they've got the most volume and they're, with my sizing, obviously we have different sizing, but for me personally, I feel like I would grab, 4 or 5 of these things because they've got the best volume and they're pretty close to the money. Like a $15 move for SMCI is achievable in a day, So, um, but
now is or like 3 270s, which is 3 270s.
if you're willing to hold and you're willing to give this play a couple days of time, I would suggest taking just one 260 contract.
Just take 1 260 time.
Yeah. And then but I would also have, if you only have one contract, I wouldn't go shooting for the stars. I would have a much more conservative target and give it like, I would only shoot for like 255.
Is would you potentially take the
Yeah, you can. You can definitely do that. You would scale out of the 275 first because it's further out of the money, it's less likely to hit, and it will take theta faster. So you would scale out of the further out of the money contract faster. But like I said, I do like the idea of just grabbing one 260 contract, but like I said, I would have a much more conservative target on it just because you don't have the scalability, right? And you've heard me go over this before, right? About how having multiple contracts gives you scalability.
yes.
Yeah. So if you only have one 260 contract, I'd probably reduce your ultimate target to about this 253 to 255 area. But if you've got
Okay.
scalability, this should still be a trim. But also, I think you could still probably hold a runner up to this 265 to 267 area. Yes, 253 to about 255 is where you'll run into trouble first. Yeah. Yeah, I like SMCI. It's just I can't pinpoint a clean move on it. I trust me, I want to alert it. It moves really, really nice. It's a great trading name. And I haven't sent an alert out on it before, but this thing just it reminds me of 2020 in the 2021 trading environment, how there were so many growth names that were giving just absurd moves. Like, let me show you some of these stocks, dude. Like LM, Lemonade. Lemonade is the first one that comes to mind. Like, I have to zoom out so far. Like, look at the type of trading action that this thing was giving in 2021 and 2020. Like, you know, this thing was going from 85 bucks to 110 in a day. And then like even during the chop, it was giving you 160 down to 145. Like This thing, the SMCI reminds me of a lot of these names, and there's so many of them. Asana is another one. Like this thing was doing numbers. Like this period from like September to maybe about here. Like this period of trading, this like 6 month period was some of the most fun I've had in the market. There's so many, dude. Like I could just keep going. I think Robinhood was even a part. Yeah, Robinhood had some fun during that late 2020 session. Um, wow. Uh, Palantir. Palantir was a ton of fun back in those days. Like, God, that was just a different environment when rates were at zero and literally every growth name was just moving like a fucking penny stock. God, there's some I want to find in here. Like, oh, even SunPower. SunPower was given crazy moves. It's a different time. It was a different time. Oh my god, Snapchat too. Snapchat was nuts. Yeah, but anyways, that's what SMCI reminds me of. The way that it's moving right now, it's very reminiscent of growth names in 2020 and 2021. Which, like I just described, they're so fucking fun to trade and they give very clean moves. So I'm super stoked that these contracts have good liquidity because it's a very playable name and you can make some really good money with this name. We just need to find a setup, just need to find something quality. And with my style recently, I've been more fixed towards day trades. I don't alert swings and I don't really take swings much at all. So I need like something very confident. I need something really clean. Like this for example, like this breakdown day, the setup before that was super nice. I wish I was watching it. And then even this breakout here over the volume shelf, this was a super clean session. That was a really clean setup. Even this breakdown day had a setup before too, but not a super clean breakdown level. It'll set something up. And trust me, if I see next week that this thing's pressing into this 265 level, that'll be another setup where we'll be looking for this thing to crack over and head right back into like 280 to 290. But I like it. I think you're good. I just want you to get a new contract. Get some new contracts.
Yeah. And when you were looking at the, you immediately saw that it was terrible.
Yes.
You and I guess what is the range of values that's terrible versus
Well, for one, let's do a quick example. So you have the 290s, right? So the mid price of this is $60. Your theta
right,
is 18. That's a 30-year contract in a day. Now let's go up towards something that's close to the money. This contract's $800 and your theta is $70. That's still a good chunk of change, don't get me wrong, but 70, that's less than 10%, right? That's far less than 10%. Whereas, I'd much rather take 10% theta overnight than 33%. So going closer to the money, if I'll be honest, I mean, this isn't the best stock just because it moves so much that it's not going to be super clean. But like, let's take Tesla, for example, right? If we look at Tesla contracts, the best, let me fix this too, real quick. That took about 30. I don't need all those. The best place to balance out the risk of a loser versus the gains that you'll make if you're right. It's the perfect balance. So these four contracts, so two in the money to two out of the money. These four contracts right here, they're the best trade-off with risk and insurance. They're the best trade-off. If you go further out, you start competing with theta and you need a much bigger move to start making dollars. Granted, let's say if you catch a $5 move on these contracts versus a $5 move on these contracts. So if Tesla's 215, right? If this contract makes if Tesla does $5 for me, right? And let me break out the calculator real quick. So if Tesla moves $5 in a day and you're holding these contracts, the 215s, let's say you pay $7.90 for them, right? If it moves $5, they'll be worth $11.20. So 1120 divided by 790, you're making 42%. Okay, that's a 42% move for a $5 move on Tesla. Whereas if you catch a $5 move on these contracts you pay 180. If you move $5, you get 315. So 315 divided by 180, that's a 75% move, right? So if you're playing further out of the money contracts and you get the same move, you will be rewarded with a bigger gain, right? However, it works inversely as well, right? So let's say it moves against you and this moves $5, right? So now you're losing. Okay, so if you take these contracts and it goes down $5, so 315 or 180 divided by 315, that's a loss of 43%. You're losing 43% of your value if you lose. However, up here, if you go 780 divided by 1120, you're only losing 30%, right? So you see the difference there?
Yeah.
This area is the best spot. It's the best trade-off for risk and reward. It's the best trade-off. These 4 contracts are typically where you want to stay. Granted, if you have the sizing to afford multiple contracts within your risk. No, because you're taking on more of a risk down here. Um, yeah, that's it. You're just taking on more risk. I mean,
290. So it's a little.
oh, that is a little better. Let's see, what are those ones at? Okay, that's not terrible. Still pretty far, you know, and 30 of, I'll give you the benefit of the doubt and say these are worth 120. So about 25% of your value is gone overnight.
Right. That's rough.
That is pretty rough compared to less than 10% on these. But these are 250s. We were talking about 260s. So let's say this is 435. So 57 divided by 435, that's 13%.
Tomorrow, just wait Mondays for no reason.
Yeah, but you also run the risk of it not giving you the entry on Monday. Like let's say it moves tomorrow, right? If it bounces tomorrow, then you know, I mean, if you hold your contracts that you have right now through tomorrow, you can close them, but then you run the risk of not getting the entry opportunity that you want tomorrow or Monday. You get what I'm saying? Hello?
Yes, all right.
I was just saying if you close them tomorrow and you wait until Monday to enter, if it bounces tomorrow, I would say you missed the entry. And it's not as confident. So what you want to see ideally is if we open up right where we're at right now, you can lock them in, but then hopefully we get that dip into that 240 area and you can still just get them. But anyways, looking at these contracts, the 460s, this is a 13% loss on theta. The contracts you have are a 25% loss. So it's double. Okay. Someone said they wanted to look at what I'm looking at. Suki, stop it. Relax. What's going on, Sabbath night? How's your night going? Got anything you want? It's going good. It's going good. Can't complain. You know? Who doesn't love a euphoric market?
Oh yeah, it's been great the last couple days.
Right? You got anything you want to look at or any general questions?
Top of my head, just hanging out, trying to learn.
Sure, sure. Well, I can go over a play that I'm looking at for tomorrow that I feel really good about. This one looks really fun. So, okay, let's just get a clean chart going. Okay, I'm gonna clear this one. All right. So, a few things to mark out. This big 135 area, pretty important. We've seen a lot of attention down there. A lot of buys come in at around 135, so I'm gonna mark this spot off. I'm just going over a setup that I really like for tomorrow. And then looking bigger picture, right? We can see that this 145 level has hosted a lot of the bounces as of recent, right? So 145 has hosted a lot of the bounces, and we have seen 1, 2, 3 bounces from this spot, all of them resulting in a lower high, right? So trend very clearly bearish. They are not loving it up here. They do not want it up here, right? So that's not a trend line. I wouldn't make a trade off this, but I'm just using it to show that we're making lower highs. In fact, I could even go like this just to make it clear. But a lot of lower highs, right? And now we've spent the last week unable to get over this 145 level. So we have now shifted value under what was previously a major support area. Okay. And now you also look at the market, and what's the market been doing the last 4 or 5 days? Saba?
Now you're asking me.
Yeah,
I think the last couple of days it's been more going up.
it's been going straight up. It's been going straight up. Nothing but up, right? And what's Snow been doing? What's our good friend Snow been doing the last week?
They're going against it.
Yeah.
Going down.
So this is what we call relative weakness, right? Despite the market being overwhelmingly bullish, you would hope that Snow was doing something like this with the market. For what the market's doing, you would hope Snow's doing something like that or like this, right? No, it is flat, and we saw a major sell-off today, right? And so this is something that we refer to as relatively weak. And you can see after hours, right? 145 has been that level to beat. They couldn't do it. We got a fake breakout today and brought us all the way back to the bottom of this range. So looking at this spot, we know the trend is bearish. They've shifted value under the support. And now I want to focus on this 140 level, right? This 140 level has been the support for this zone, right? Right about there. Let me clean it up real quick. Bang, and bang, right? So there's our 140 level. We got 1 bounce, 2 bounce, 3 bounce, 4, and 5 bounces off of it. So this thing's clearly weak, and all we need is a break under this 140 level, and we should be able to see a very confident continuation move lower. So I know it looks like it's all the way up here, but if you look after hours, it's actually right around here somewhere, right? So if we look at a 5 minute, you can see it closed up here, but in reality right now it's right here. It's at 141. So looking back at that chart, it's right here at 141. This is where it's currently at. So all we need is a break under this 140 level. And if we get that, we've got this major 135 level to target, right? That's where price has been a magnet for the last year. So ideally, it looks something like this for us. Ideally, we can get a candle looking like this tomorrow. And this is a very clean downside setup for us.
Okay, so you're saying like if it breaks just the point you want it to be, you want to be pretty quick on buying a put at that point in time down at 135.
Yes. If it breaks, if we see any weakness under 140 tomorrow, we want to get short and we want to look for a continuation move down.
What do you mean by weakness?
anything if price is under 140 tomorrow? Okay, so that's a good question actually. This is not weakness, right? This got bought. This is a wick under and it got bought. So you at least want to see something significant close under this. But I would argue that if market shows any weakness tomorrow, we might front run it a little bit because I believe that we can expect this to break down.
Okay, so if we close a candle underneath that, it's going down to 135.
Yeah. So for example, look at like this price action, right? Um okay, so imagine this but opposite. Okay, this is gonna be kind of tricky what I'm doing here, but this would be like this is a breakout and continuation, right? So they're using 145, they break it, and then when we retest it, they buy it. So imagine the exact opposite happens down here. Like imagine we break under 140. Let me get rid of this 141. I was just using that to show where price currently was. So imagine we break down like this. Oh shit, that's not what I want to do. So you could also do something like this. So first, if we just get a candle close under, you could take a stab at it immediately. But what you ideally want to see is something like this. Something like that, right? So that would be weakness under. So we break under, and as soon as we retest 40, you're entering because your risk to reward is extremely great. So, for example, you get one of two situations. If you enter right here on the retest, right, it comes up, it taps 140, and it fails. This is likely what follows through. Otherwise, let's say it reclaims and it saves it, just like it did right here, right? So if this happens, you're entering at 40, your stop loss is maybe 41, right? So your stop loss is 41, but you're willing to play a move down to 35. So your risk on this is entering on this retest, right? Right here. If you're entering on this retest right here, your risk to reward is 5 to 1. You're risking 1 to make 5. Does that make sense?
Yeah, this is a great risk.
Exactly. This is a very confident setup, right? But this would constitute weakness under 140, right? If you see it, you could either take the stab right here when it first breaks under, or you could take the bigger risk in my mind because it might not give you that retest, right? It might not retest it. It might just flush under. So this is the safer entry though, just because contracts will lose a bit of value on the puts because we bounce, and you'll get a safer entry. But there's also the chance it doesn't happen, right?
Could you turn like forward contract?
Yeah, yeah, you can definitely do that. You can definitely do that. That's totally fine, right? If you want to what's it called? If you want to just take that first stab on contracts with just a little bit of size, you can, and then if you get the retest, you can add in. That's yeah, that's not a bad idea at all. But does that answer your question?
Yeah.
Sweet. But yeah, this is my most confident play for tomorrow. The other two that I have, so part of the reason why I think we're going to see some selling tomorrow is because Apple's earnings was less than great, and most of you guys know they are the biggest name in the market by not a little, a lot. Um, and how they move definitely affects price action. But not only that, we've got some pretty big data points tomorrow. We've got non-farm payrolls, we've got the updated unemployment number, and then we've also got services PMI. So the unemployment rate, I hate to break it to you, it's not going to change. It's going to be the exact same as last month in the previous fucking 3 months. It's not going to change. So that won't move markets, but the non-farm payrolls will, right? If non-farm payrolls deviate from the expected report by too much, we will see that priced into the action immediately, right? If non-farm payrolls come in high, we'll probably sell it off because everyone kind of wants people to start getting laid off at the moment because as the job market remains strong, it means that inflation is likely to stay persistent. It's one of the many factors baked into the uh, the inflation rate and how inflation occurs. Um, if it comes in low, there's a good chance we'll buy it because good news is bad news right now, right? Bad news is good news because people, believe it or not, people want the majority of economists believe that increased unemployment, right? So the unemployment number going higher, people losing jobs, is a good thing because it will curb inflation faster. We can't curb the inflation rate if the jobs market is still strong. If people still have expendable income, companies have no incentive to reduce their prices. There are other factors baked in as well, right? Like for example, energy. We can't really do anything about energy. We already energy prices are going to stay elevated, so that's tough to work out. But um, as for discretionary purchasing, rent prices, all that kind of stuff, there's been zero pressure on those sectors. So there's been no reason for inflation to come down at all. So in a sense, bad news is good news and good news is bad news right now, right? So if non-farm payrolls comes in high and a bunch of people are still getting employed and all that fun stuff, markets can react poorly to that because it means, oh shit, we're still fighting inflation. Whereas if it comes in low, it would probably be a buy reaction because people are assuming that, the rates are working, companies are under stress and they're not hiring as much and they're even laying people off, right? So it's a little bit unusual, right? Everyone's rooting for bad news and everyone's, scared of good news at the moment, which I don't know what there's to be scared of. I haven't heard any good news in a couple years, but um I honestly, but anyways, those are two things that are major reports tomorrow. And I have a hard time believing that payroll is going to come in low. I expect payroll to come in pretty high. And we've got Apple earnings that were not so great. Apple's down about, I don't know what, couple percent after hours already. And then,
Yeah, I was gonna ask you about that. I was gonna check every day, so everyone kind of had a heads up on what was gonna come from Apple.
well,
Said anything to me. All that they dropped like a good bit after hours. I don't really know what happened.
yeah, I haven't gotten a chance to look at the full report quite yet, but from what I read, it seems that they reported their fourth straight quarter of declining sales year over year, and this is the longest slump that they've been in since 2001. So yeah, I mean it doesn't really do much to their valuation just because their EPS is still strong. They still pay a good dividend. There's no reason really for it to like tank per se,
Mm-hmm.
but it is definitely putting a damper on expectations for growth. You get what I'm saying? So it's not so much reason to like sell it off because they still have a massive cash pile. They still pay a dividend. Their earning per share is still strong. They're still a great company, but without growth present, there's not much reason to believe that they'll shoot much higher. You know what I mean? It seems like there's kind of just a fair valuation event going on.
So do you think they'll drag Microsoft down as well? Pulling the
And
Microsoft share prices down?
I'd say no, because I mean they do move in sympathy quite often, but
Mm-hmm.
Microsoft's earnings was good. Microsoft's earnings were killer.
Okay. Yeah, I
And
got a long on that one for Microsoft. Heads up a little bit for me.
yeah, I feel like that one may not work out for other reasons, not because of Apple though. But we'll see. We'll see. I thought today was going to be a red day, to be honest. And look how wrong I was. So shit. Why not three massive green days in a row?
Thanks for Tesla today. I mean, nothing major, but it's nothing for me because I'm just starting out. Making like $1,000 on Tesla.
Nice.
contract. I feel pretty good about that, but like I said, I'm nowhere near a lot of money at Tuesday, so
Yeah, I gotcha. Well,
It's not how bad news is good news. Is that the same thing that happened today with the unemployment claims?
I didn't even read about unemployment claims. Did they come in? Did they come in high?
Yes, they came in high.
Yeah, that makes sense. That makes sense. I didn't. Was that on the Fed calendar? I didn't see it. Let me look back real quick. Yeah, jobless claims. Okay. Yeah. Oh, we have jobless claims like twice a month. So I think people are. Oh, they didn't even come in that high. Wasn't that crazy? Yeah. But anyways, tomorrow the big one is non-farm payrolls.
okay.
That's the big one, and that'll be out. That'll be out an hour before open. So there's a good chance that the move will already be made. The initial knee jerk reaction to the data will be out, right?
Would that um, initial reaction be the force of that day's market?
Who's to say? Who's to say?
Yeah.
I'm even writing in my outlook right now that I think dips should still get bought. I think if we do see a red day tomorrow, it shouldn't do anything more but offer a better chance to grab some swing longs. There's two ways to look at it. You can look at it day by day, which is primarily what I do, but even if you're looking at it day by day, you still have to zoom out and think about the bigger picture, right? So I mean, tomorrow, I think there's a good chance that we see some pullback and maybe even close it back under 4,300 tomorrow on ES. But I think it'll be nothing more than providing a good dip buy opportunity for the next week or 2 weeks.
So you think we'll have it on top tomorrow?
I don't want to predict chop, but I mean, it completely depends how the data goes. You know what I mean? It depends how the data goes. It depends where we open. There's a lot of factors that we can't really predict right now, but the trend is green. VIX still has room lower, and I guess this recent down move has provided plenty of breadth for the market. So I would imagine the trend stays green for the next couple weeks. And any red days should probably still be a discount for longs. That's how I'm approaching the next week or two.
Okay.
But we'll be here. We'll be trading it every day. You guys know that. But as for I wish I could tell the future. Honestly, I really do. I wouldn't be here. But I don't mean that in any way. I just mean shit. If I could predict the future, I'd trade for all of one day and make my riches. You know?
I think I,
Yeah. I've said this before, but if you can just predict where the market will close, if you can just predict where the market will close, you don't have to know what it's going to do throughout the day. If somebody just told you, "Hey, listen, I'm from the future. The market's going to close at this today," you could literally make millions of dollars that day just off of that information.
right.
You know. Um.
Going back to people,
Yeah.
so we've had a large, market drop. Do you think that that's creating a good dipping, buying opportunity for going back long now if it kind of holds down in that low overnight?
Let's look at Apple. Yeah, they're already dipping. They're already buying it back. Dipped under 70. They picked it up. Yeah, it just looks like a little pullback. Like I said, like we were just saying earlier, it seems like there's a little bit of nerves with the lack of growth, but there's nothing wrong with the company. So it feels like it was just a correction. Like it feels like the last 2 days everyone was just buying it up in anticipation of the earnings, and it just kind of came in flat. You know. It just kind of had like a 2-day correction. I wouldn't even read much into this, to be honest.
Okay. See, so would you think it'd be a good, going long on some? With it being done in that price range?
I think the whole market's a good long for the next couple weeks. Anything,
Okay.
anything. Honestly, your best bet is probably just SPXL. This is what Mo's been chirping about as well. If this thing dips at all, really, if it dips a couple bucks, I would start picking it up and getting ready to hold it for a couple weeks. Um, have you been following anything that Mo says in his channel?
Anytime anyone posts anything, I look at it, read it.
Yeah, Mo's a goddamn genius, and sometimes I think he does have a crystal ball. Um, yeah, he's really good. He's really good at figuring out macro trends. I wish I was on his level because he nails them every time. And we always call bullshit. We always tell him, "Oh, you're an idiot. You're wrong." And then a week later, he's chirping in our ears, tooting his own horn. So I don't know, but listen to what that man says, and he's been all SPXL is it's just the 3 times leveraged ES. So if the SPY does 1% in a day, this thing's gonna do 3%.
Okay. So is that a bigger money making potential with it being 3%?
Goes both ways. Goes both ways. I don't know if there's options on it. There are options on it. Yeah. But yeah, so if ES, like I said, if ES does 5% in the next couple weeks, this thing will do 15%. And it's more of an equity hold. He's playing it with equity. He's not playing options on it. But I think it's fine. I think it looks good. I mean, you obviously don't want to be a buyer today. You're not getting the best deal. But if we do end up getting that red day tomorrow, that'll probably be a decent opportunity to start picking it up.
That's great.
Hell yeah.
Hey, I'm learning a lot. I'm picking up on a lot of stuff. So
Good, man. I'm glad to hear it.
I'm, trying to figure out. I'm finally figuring out like the acronyms, kind of what's going on when y'all say like, different price points and everything. It's really starting to understand a lot more. So
Good. Good, man. Hell yeah. Well, I'm gonna wrap up the session here. I got some bets on the basketball games I need to attend to. And,
Hey man,
I appreciate it, man. I need it. I'm on a rough streak. You watch any basketball?
No, I don't really watch basketball.
You sound like a football guy yourself.
Like pretty much just college.
Yep,
I don't even watch NFL really.
I could hear it in your voice.
Yeah, I live in Alabama, so we're a big Alabama fan. And
Hey, roll tide.
that's about it, really. Yeah, that's all right.
Nah,
It kind of sucked this year, but
Bama sucks. I haven't heard that in like 2 decades.
sucked. But we lost 12 games. We're not as good as we have been. Our quarterback's not very good, so
I feel that.
quarterbacks with Jalen Hurts, Mac Jones, Bryce Young, and all of them. So this year's a downgrade.
I feel it. Well, anyways, I see 2 of you guys just hopped in here, H9 and Daniel. I am ending the session here. It was a good one. We covered a lot of good stuff, but this session is recorded and it will be posted on our YouTube page in the next day or so. So head on over to the socials page. What's that?
What's the YouTube page?
It's let me link it to you real quick. Where we at? So the socials page has all of our info. But I'll just link you it in chat. Page 9 socials. All right, so this page that I just linked to in Stock Talk, it has all of our socials on it, and it's got our YouTube page, our TikTok, our Instagram. We would greatly appreciate a sub and a follow on the Instagram. But this session we covered risk reward, we covered some volume profile, we gave a little bit of a market outlook, and we even covered some planned plays for tomorrow. So definitely go check that out. It's not going to be posted today. It'll probably be posted tomorrow or Saturday. But if you want to review older sessions from last week or the week before, that's the place to go.
When's the next one?
I host on Thursdays, every Thursday, but I'll see if Hoosier can host on Tuesday. Yeah, of course, man. I hope you guys have a great night, and we'll see you guys tomorrow. Let's kill it.
Good luck.
Hell yeah, man.
See ya.
See you later.